What are Sukuk, Islamic bonds in emerging markets? Imagine a way for countries and companies to raise money without breaking Islamic rules. That's where Sukuk, or Islamic bonds, come into play. They are a popular tool in emerging markets for financing projects and growth. Sukuk are certificates that show ownership in a real asset, project, or business that follows Islamic law. Unlike regular bonds that pay interest, Sukuk give investors a share of the profits made by the underlying assets. This means investors earn money through the success of the project, not interest payments. The ownership rights are shared among Sukuk holders, giving them a stake in the asset. In emerging markets, Sukuk are very important because they help raise funds in a way that respects Islamic principles. These markets often have large Muslim populations who prefer investments that comply with their faith. Sukuk are backed by tangible assets like real estate, infrastructure, or businesses, ensuring the funds are used ethically. The assets must avoid forbidden activities like gambling, excessive uncertainty, or earning interest. There are different types of Sukuk structures. Sukuk al-Ijara involves leasing assets, where investors earn income from rent. Sukuk al-Musharaka is based on partnership, sharing profits and losses. Sukuk al-Murabaha involves a sale at a markup, where investors profit from the sale of goods or assets. These structures are designed to generate returns through leasing income, profit sharing, or asset sales, not interest. Sukuk help develop deeper and more flexible Islamic capital markets in emerging economies. They attract investors looking for Sharia-compliant options and provide governments and companies with access to funding for infrastructure, development, and business expansion. This is especially useful in regions with growing Muslim communities or where Islamic finance is expanding rapidly. The process of issuing Sukuk involves selling certificates to investors. The proceeds are used to buy or develop the assets. As the assets generate income, this is shared with Sukuk holders. Investors can also benefit from capital gains if the value of the Sukuk rises. Since Sukuk are tied to real assets, investors share the risks and rewards, making the investment more aligned with actual economic activity. To sum up, Sukuk in emerging markets are a way to invest in real assets that follow Islamic rules. They offer a Sharia-compliant alternative to traditional bonds by avoiding interest and sharing profits and risks. This helps support economic growth while respecting ethical principles, making Sukuk a key part of the future of Islamic finance worldwide.